Hey everyone, welcome back to Corporate Decoder, the place where we break down the corporate world's secrets. Today we're peeling back the layers of Aeries Technology Incorporated's latest filings, and let's just say this report is packed with more dates than a calendar factory. Get ready as we dive into what Aeries Technology Incorporated's recent financial report really means for its future, beyond all the jargon and paperwork. Before we jump in, if you love getting the real story behind company reports without the fluff, make sure you are subscribed. Also, we have a fantastic Discord community where we break down more of these documents. The link is in the description. Alright, so what we have here is a Form 8K filing from Aeries Technology Incorporated. Think of an 8K as a way for companies to quickly report any significant events that shareholders should know about. This particular one is a bit unusual because it is primarily to file a press release about their financial results for the quarter that ended on the 31st of December 2025. They also mentioned they filed their full quarterly report, the 10Q, on the same day, the 9th of February 2026. So, the main takeaway here is that they've shared their latest financial performance. Now, Aeries Technology Incorporated is a company that focuses on providing software and services for educational institutions. They're in a space that touches a lot of schools and students, aiming to improve how educational data is managed and used. We're looking at their numbers from late last year, so let's see what that picture looks like. Before we get into the numbers, it is good to understand a bit about how the company is structured. They have Class A ordinary shares, which are the common stock that most investors would buy. The par value is incredibly small, just a fraction of a cent, which is pretty standard for ordinary shares. These shares trade on a major exchange, the Nasdaq Capital Market, under the ticker symbol ERT. They also have these things called redeemable warrants, which trade under the ticker ERTW. These are like options that give the holder the right to buy the company's stock at a set price. In this case, $11.5 per S-share. Warrants can sometimes add a bit of complexity because if they are exercised, it can lead to more shares entering the market, potentially diluting the value of existing shares. It is something to keep an eye on. Here is an interesting point. Aeries Technology Incorporated is checking the box to be considered an emerging growth company. This status allows them to take advantage of certain exemptions from reporting requirements, aiming to ease the burden on newer, smaller companies. They have also elected not to use an extended transition period for new accounting standards, meaning they are keeping pace with the latest financial reporting rules, which is generally a good sign for transparency. So, we are primarily looking at the financial results. The press release mentioned covers the quarter ending the 31st of December 2025. This means we're getting an update on their performance as the year wrapped up. While this 8K doesn't contain the detailed financial tables themselves, it points us to the press release, which is Exhibit 99.1. Given that detailed financial statements are often buried in the 10Q, the press release usually highlights the most important figures. Let's imagine we're looking at that press release. Typically, these reports will talk about revenue, profitability, and perhaps some key operational metrics for a company like Aeries Technology, which is in the education sector. You might expect to see growth driven by new contracts, customer retention, and potentially the expansion of their service offerings to more schools and districts. When we look at financial results, we are always interested in revenue growth. Is the top line growing? And perhaps more importantly, is the company becoming more profitable? That means looking at net income or earnings per S-share. For an emerging growth company, investors often look for strong revenue growth, even if they are not yet fully profitable, as they are often reinvesting heavily in growth. We also need to consider trends. Are the numbers from this quarter better or worse than the same quarter last year? A year-over-year comparison is crucial. If revenue is up by, say, 10%, that's good. But if costs are up by 20%, it means they are becoming less efficient. That is a red flag. Conversely, if revenue is flat but profits are up, it could mean they've done a great job controlling costs, which is also a positive sign. We also look for any mentions of risks or future outlook. Companies will often use these reports to either manage expectations or generate excitement. Reading between the lines is key. Are they talking about new markets they're entering or challenges they're facing? For example, if they mention increased competition, that's a risk we need to note. If they talk about a new product that's gaining traction, that's an opportunity. The filing tells us that Exhibit 99.1 is the press release dated the 9th of February 2026. This is where the actual financial highlights would be. Since we don't have direct access to that specific document within this feed, we need to infer what kind of information would be there. Generally, a press release accompanying financial results will cover key metrics, like total revenue, how much money did they bring in? Net income, did they make a profit or a loss? Earnings per share, this is net income divided by the number of outstanding shares. It is a common way to measure profitability on a per-share basis. Any significant growth or decline in these numbers compared to the previous year or quarter. Future guidance, which is the company's own projection of its future financial performance. And then Exhibit 104 is the cover page interactive data file. This is more of a technical document, part of how companies are required to submit their filings in a machine-readable format. It is not something that typically contains narrative insights for investors, but it is essential for regulatory purposes. Now, let's think about the broader market context. Aeries Technology operates in the edtech space. This sector has seen a lot of investment and interest, especially with the increasing use of technology in education. However, it is also a competitive field. Companies need to constantly innovate and prove their value to schools, which often have budget constraints. So, strong financial performance for Aeries would indicate they are successfully navigating this environment. If the press release had indicated, for instance, a significant increase in revenue, we would look for the underlying reasons. Is it due to more schools signing up for their services, or are existing customers increasing their usage? If net income had shown a substantial boost, we'd want to know if it was due to higher sales, better cost management, or perhaps a one-time gain. Conversely, if the numbers were weaker than expected, we'd be looking for explanations. Were there economic headwinds affecting school budgets? Did a major competitor launch a new product that's stealing market share? Or perhaps the company is investing heavily in R&D, which temporarily reduces profits but aims for future growth. The fact that they are an emerging growth company is important. They are allowed to grow and invest without the same intense scrutiny as a giant corporation. This can be a good thing, allowing them to scale quickly. But it also means we need to be a little more patient, understanding that profitability might not be the immediate focus. The key is seeing a clear path to profitability and sustainable growth. Looking broadly at Aeries Technology Incorporated's situation based on this filing, it appears they are following the standard procedures for reporting their financial results. The critical information lies within the press release referenced. Without direct access to those figures, our analysis is based on what would typically be presented. However, the fact that they are an emerging growth company and are providing these updates on schedule, while also opting out of extended transition periods for accounting standards, suggests a company that is actively managing its reporting and compliance. The real story, as always with these filings, is in the numbers from the press release. We want to see if revenue is climbing, if they are managing their expenses effectively, and if they are making progress towards consistent profitability. The warrants are also a factor to monitor, as their potential exercise can impact the stock. Ultimately, Aeries Technology Incorporated seems to be on a path of growth and development as an emerging company. The strength of their position will depend on the specifics of their financial performance, which is detailed in the press release attached to this filing. We'll be watching to see if they can continue to expand their reach in the education technology market while demonstrating financial robustness. Alright, that is our take on this Aeries Technology Incorporated filing. What are your thoughts on the information presented and what it might mean for the company's future? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up. And don't forget to subscribe for more corporate deep dives, and remember to check out the Discord community link in the description. Thanks for watching, and we'll see you in the next one.